No sé qué, pero ya va a comenzar el trading. Hello guys, how are you? I'm just gonna wait a couple of minutes for everyone to join in. Normally I wait until 8:02, 8:03, and we get the lecture started.
Before Deontay Wilder, right? Because that weight, that girth, that big man, over man weight just leap.
All right, guys. Let's see who's here. What up, Lotto? How are you guys? How was your day today? You can all answer in the chat. Did everyone trade it GME and AMC today? Crazy day. That's a fun day today. Big green. Nice, Jay. Yeah. Some reminiscence of 2021. Our trade still finished green, but definitely gave some gains back. Yeah. When we have these moves, guys, FOMO, it's gonna be huge. And these are the days when we have to. I think it's a great class and a great lecture for today. Trading psychology is 70% of trading. So I will go through a couple of different things. It doesn't, I'm not a doctor, I'm not a psychologist. Um, I'm just gonna share some of the, let's call it wisdom that I've learned over the years trading, but still there's so much more in depth that we can talk and we can share and we can learn. So it's gonna be just certain rules. And I think a day like today, it's perfect to talk about this because probably today were a lot of people trying to chase, a lot of people watching the games on GameStop and being a little uh sort of um jealous about the games and then maybe comparing yourself with the size of that you only made $100 and some people made $2,000. So all of those things matter on trade psychology. Just gonna wait one more minute and we will start with the presentation. Thank you everyone for taking the time to learn a little more here and to give me some company on my sort of podcast here. I'm muting the people that it's entering just so you know. And you'll be able to unmute yourself, but I'm just muting everyone just in case, so we don't have any problem. Rudy, how are you? Good night. How's everything? All right, guys. So I'm gonna start this session 802 with some slides. Today, I'm not gonna have too many charts. This is a talk. I'm just gonna talk. I'm gonna share. We're gonna discuss a little bit about how do we attack managing feelings with tradings? How do we manage not getting emotional? How do we manage not to overtrade? How do we manage FOMO? Things like that. But I'm gonna start with something simple, and it's gonna be this. Please take time to read this. Professional player, a tennis player, normally trains 6 to 8 hours a day. And that's, normally how someone will train. So I just want to give you, where I'm going with this, but I just want to give you some context. What about a pilot? When every time that we get into a plane, do you think that guy just grabbed the plane the first time? There was full of passengers, and he said, oh, I'm just gonna give it a try. Let's see how it works. I'm just gonna turn on, thrust the turbines completely on and see if I can land the thing or not. They needed to go about 24 hours of training in a simulator, and they have a requirement of 15,000, like 1,500 hours as a pilot to be able to be safely doing what they do. What about someone, Conor McGregor? Let's say that. I know that there's a lot of fans of MMA here, and this guy trains somewhere about 10 hours a day for some fights that maybe is just a kick or just a punch, and they don't last 10 minutes. But either way, they train for 24/7, 10 hours a day. And let's talk about basket, just my last one. LeBron trains between 3 to 4 hours daily. That's his regimen. I know that he has a diet and he's super clean in all the things that he do, and he has a routine with weightlifting, and he has a massage, and he has therapy. So, and after all these people who practice all these hours and try to be the best ones, who's next? You. How many of you grab $5,000, open a Webull account, and all of a sudden just jump into the market and try make money? Raise your hands. How many of you guys? How many of all these people have you grabbed $1,000 without having a clue? But you just knew that you opened a Robinhood account and then just jump into the market, and then, oh, I'm pissed. I lost $1,000. How can that be possible? Now I'm depressed. I'm not good for this. What's happening to me? And you start questioning yourself. You over here, I'm down 8K. Yeah. I mean, and 8K, it's light. That your name doesn't say it in there because you only say iPhone. But listen, I've been here. I'm a true example of how trading psychology can move you in every direction, guys. And today it's an incredible coincidence day because I lived what on 2021, what happened with ANC and GME, and I made a bunch of money, a bunch, and I lost it in a week. And I not only lost it, I used margin, and I went down on my margin account because I had no clue how to use margin, and I was getting crazy movements on my accounts, and I blew my account. I blew my life savings doing all of this. And that's how I learned how to be very careful, how to do tons of things. So I learned the hard way, and I'm glad that I found you know, a direction. I found mentorship in OOT. Tilio as a fundamental. I've learned from guys like Flips, River, everyone, and you have no idea how this can change your life. But having a little guidance on your trading psychology and to protect yourself. And all of this, it's about emotions. So I'm glad that we're here. I'm glad that we're watching this. Um, I wanted to share this with you about the athletes because we sometimes you get peace with yourself, or you get, you know, we're really hard on ourselves, but we're not sensible of do I really know what I'm doing? Do I really know how to learn candles? Do I really know like uh how to use all the indicators that I'm using? How many of you don't even know how to use maybe TOS the exact way you knew? You don't know how to use the trail stop, or you don't know how to do a stop market on Webull. I've seen that. So I'm not trying to blame anyone on or to feel or make you feel bad. I'm just saying we need, like, in order to be successful, we need to ace this learning. We need to know what we're doing in order to be successful in what we do. And feelings are gonna affect everything that we do, because if we don't know what we're doing, we're gonna try to do it either way because we think that just by putting $1,000 on we're gonna make money and we're gonna become traders and live from this. And you know, hey, it's not gonna be that easy, because if not, everyone will be driving Lambos and you know, living in a penthouses and stuff. And the majority of traders do not. The majority of traders, they blow their several pores and then they go away and they say, this is not for me. Why? Because we don't have the complete instruction. We don't put the effort and the time, and then emotions get in the way. So I browsed a little bit the internet trying to see how every time that you find something about trading technology, what do you see? Managing emotions, cultivating long-term perspective, overcoming biases, understanding market behavior, how to develop a trading plan, have some discipline. These things, we're gonna see them over and over and over again. Like, are you nervous? Do you, when you get in, did you manage the size of that trade? Maybe you make, you know, $8,000 in one trade, and then you say like, oh, this is, I don't know why people is so, you know, worried about this. This is a piece of cake. I'm just gonna put $10,000 on my next trade and I'm gonna make 20. And then, hey, you lose it. So do we have fear? Sometimes if you leave a position open and you have a hard time sleeping, because, you know, you over leverage yourself. Maybe you have a $1,000 port and you put now you bought a $450 GME to swing to see if tomorrow you're going to double your port. Is that trading? Yeah. It's going to give you, that's greed. Is that going to give you anxiety? Did I FOMO today? This is, you know, am I becoming, am I the fault of me questioning myself? Who's to blame? I'm the one to blame. So it's a great, you know, it's a great moment right now, because everything happened with SPY and GameStop. It's gonna make you try to follow, try to chase. It's gonna affect your port. Probably some of you were green and tried to chase that peak on GameStop, and then when it went down with the spread being $100, maybe you close out red. So hey, lessons. That's how we learn. This is the normal sort of curve from trading that sometimes happen when in the market. So we have an optimism. We're green, we have a thrill, we have euphoria. We made some money, and then we start losing a little bit of that money. Now we have denial. Now we have fear. Now we're desperate. We're liquidating our assets because, you know, we're in a margin call. We need to then panic, and then I need to call a shrink because I have trouble sleeping and capitulation, and that's it. And then again, we have hope, relief, optimism, and this is a curve. This is the normal cycle of trading. The idea is to be away from that cycle by knowing how to control our emotions, to be super strict on how do we trade. Why am I not going to grab SPX at the end of the day? If I'm green, I don't need it. Why am I going to risk giving anything back? If I'm making $50 per day, that's enough money for a lot of people to, that's $250 per week. Some people don't make that, working 8 hours a day. So why am I going to risk it just to see if I double it in something that I can't control and I'm not fast enough or I don't know how to use it? So the only one to blame, it's us. It's me. I clicked, I gotta be responsible for that. So more, this is just random things that I grab from Google. Every time that you search for trading psychology, they give you, what are the keys? You need to know how to control your emotions. You need to know how the risk management is going to be. You have to know what you're doing. You have to have a plan. We repeat it over and over again here. You have to have a plan of what you're going to do. Even if you just saw a name that it just pumped, GME just pumped. Jesus, am I going to just FOMO and chase it? No. Let me see what the price of the contracts. Where are we compared with the last year? What price is the contract? During my port, it's big enough to jump into it. Should I do it? Can I handle it? All of those questions. If I lose, am I okay losing $500 in one contract while I'm trying to make $50 for the last 3 weeks? So those things, that matter. And in the part of the role of discipline, I'm gonna put the paper trading, guys. Paper trading, take it seriously. It's key because that's the only practice that we have in this sort of career that we chose to practice. Like, apart from that, every time that you're clicking and you're putting money at risk, it's 50-50, you're gonna lose it. So trying to use paper trade seriously with the amount of money that you have in your port, and don't take it like lightly, like if you lose, you don't care, or if you just, I can just always reset it and I can do $200,000 and I'm gonna set it everything on SPX and make it out. Try to make it as real, like a simulator of your port. And once you find a style or a specific movement on the market that you like, stick to it, and then the only difference is going to be the amount of contracts. Again, look, I just wanted to present a little bit of how prepared we need to be, and then every time that we search of how do we manage this, it's going to be protect capital, be patient, know how to risk or manage your risk, and then technical analysis. I know where I'm getting in, I know where I'm stopping out, I know how much I'm willing to lose. Do we apply this every time that we click it? Do we? Yes? Everyone? No?
No.
How many of you? You can write on the chat, guys. Do you
Every single time I'm a no.
You're a no. And why is that? Why? Because you know that if you're gonna take that SPX at the end, you know that you're risking 50% of whatever you're putting there.
Right.
Why do we keep making these mistakes? And I talked to a member and I told him he had a big loss and he was trying to, search what happened. And there's a saying that I love to repeat every time that I have a one-on-one with everyone. It's like, guys, when you seek for help, is because whatever you're doing, it's not working out. When you're seeking for a mentor, when you're coming here to OOT, when you're here learning, is because there are things that you can improve in your learning experience as a trader that is going to make you see things different than what you're seeing right now, that maybe it's going to, increase your potential of being more successful if you are already. But one thing that is certain, and I can guarantee that if you try to keep the same thing, to do the same thing over and over and over again, and you expect a different outcome, that's called insanity. If you keep doing the same mistake, even that you know it, and every time you buy SPX at the end, every time that you see a big green candle, you chase, and then you FOMO, I can guarantee you that time and time and time, most of the time, you're gonna lose money. So it's up to you every time to decide when you are watching and you know deep inside, I should not follow, I should not chase it. You should hear your gut, and if you want to be successful, if you want to gamble and try to see if you make money by doing this, that's okay. But if you want to leave out of this and make, thousands of dollars, you can make $1,000, $10,000 per day by day trading. But it's up to you. Do you have the discipline? Do you have the knowledge? So I love this because this is 70% of our mistakes are because we're greedy, because we are undisciplined, because we just want to, one more click is not going to hurt us. And then, you know what? It hurts us. So we got to stick to what we can control. And this is some of the key points that I think we should touch about and that we talk about. We got to follow a trading plan. We need to know, like, do I have a plan? Or do I have a hope that this is gonna work? Do I have a hope that I'm gonna wake up tomorrow and GME, the little swing that I took of GME is gonna make me a successful trader, and I'm gonna feel that I nail it. That's it. I'm a trader. I made $800 in one swing. What's gonna happen for the rest of the 321 days of trading that we have? Are you gonna do the same? So I'm not being, sorry if I'm being, my tone is different, but I really need to see you, like everyone in the screen, your reflection in the screen, and see I'm the one responsible for, if I don't feel well at the end of the day, I'm the one responsible. If I lost money, I'm the one responsible. And why I'm responsible? Not because I suck, maybe because I was gambling, I didn't use the correct ways, the indicators, I didn't follow to what the 10% that rule that I set up for myself. So you need to know when you're wrong. We need to know that, hey, I've done it with you guys. We as analysts, we have the pressure of trying to be, I have 400 people on VC and in the chats waiting for us to take a trade. And if we're wrong, everyone's gonna, is gonna say something to me. And Tila is gonna say something to me. Hey, what's happening, bro? You're not performing. And then how much pressure do you have? Like, I have to make public that thing that I think is gonna work for you and for everyone. But it's the same. I don't do it for you. I do it for me because I'm trading with you guys. So, and I need to be very disciplined and I need to be very careful, because if not, all of you are gonna lose money. But it's not because of all of you, it's me. I do it because of me. And I just share it with you. I'm in this journey with you guys. So if you see yourself taking these trades by yourself, do you see yourself making mistakes like this? What if you were the one, taking that trade for your family and you need that money? And that's whatever money you're left. Are you going to take it? Have you ever taken that seriously? Because adding $50 per day could be life-changing if you put up the effort and the time. But people sometimes, underestimate that. Capital punishment is the amount of money that we can lose for not having our strict, our mind where we need it, because we're not patient enough. I always compare, for the guys who like fishing, trading with fishing. None of the fishing guys here go into a boat with 4 bodies, igloo full of beers, and they go to a spot, throw the rig there, and then they start fishing right away. No, you stay there, you go around, you set up the bite, you throw out the whatever thing, you go there, and then you just wait and wait and wait, and then all of a sudden, you have a catch, they bite, whatever. But it's not like something that you just They just go to one place and automatically you start fishing and you start, getting blue marlins right away. Sometimes you can go for 5 hours fishing and you don't grab anything. Trading is the same thing. And River was a perfect example. He said it today. Hey guys, I don't like this choppy market. I left you to all the degens and all the risky guys who thought that they're gonna make money today, or maybe you made it on GME and AMC. I didn't find any setup that I liked on SPY and QQQ, which is my bread and butter. I didn't trade. That's it. That's incredible. That's a example of someone who is controlling their FOMO, their trading is in total control of what they're doing. Because sometimes, just because we're bored, we might sit in front of the computer and try to trade. No, why? If there's not a setup, you don't need to trade. Take breaks, guys. Sometimes we sit in front of the computer and we stay here for 8 hours trying to make money until the last second. I even buy SPY at the end of the thing because I have 15 more minutes. Listen, if you did not make money on the first 3 hours or 2 hours, there's no guarantee that you're going to make it at the end of the day. So take time, breathe. If you're feeling a little bit anxious, if you feel that pressure from, wait, like stand up from your desk, eat something, grab a glass of water, laugh with your family, give a kiss to your wife, and then come back and then sit down and you start seeing things a little bit different, a little more relaxed. There's no anxiety that your eyes start seeing plays where they're not existent. You see every candle like an opportunity. We have to control that. So take breaks, adapt. I thought that GME was going to go high up all day, every day, and I bought 10 calls only. That's the only thing that I have. Hey, it was a quick, you need to know when it was a quick scalp, then I sold it. I'm not exposed to any reversal on my positions. And then if I see that there's another opportunity to take, I might take it. If not, I switch to something else that it's more, like we were trading with Nando Baba. Baba was a huge, amazing, predetermined setup that he set for a couple of weeks. And bam, it was a perfect trade, 100%. Learn from your losses. Again, if that goes back to if you're still trying to do the same thing that you're doing on the last 3 months and you are not a profitable trader and you keep doing the same thing, you cannot expect a different outcome. You need to change what you're doing. You need to change what indicators you're using. You need to change what time frames are you using. You need to change where you're getting in because you have it wrong. And the only way to practice is like the same thing with LeBron. If LeBron is trying to shoot from the 3-point and he's not putting it there, there's something that he's doing wrong. Maybe he's using too much his arms. Maybe he's bouncing too much on the knees. The coach is gonna say, hey, you're doing this, you're moving your hips, whatever. But we need to be aware of that. Stop losses. Stop losses are gonna be the paramount of your mental health. They're gonna protect you that you are not trading more than what you need. They're gonna, they're gonna make you feel that you're in control of your trade, and they're gonna protect your losses. Discipline, embracing your risk, and managing emotions. All of this is part of how do we control this difficult task that is trading, where we trade with our own money. Because there's nothing better than being like we always said, I want to be the owner of my own time. But sometimes when you're an employee, it's great because you're employed and then you get paid every 15 and 30, and you have insurance and you got money. Even if you wasted trading, you got money, checks coming every 15 days. Here we have money, flushing every day that we click if we're not successful. So are you aware of that? Are you really aware of that? Because sometimes we just, I lost 100. I just added 100 more to the account. I just 100. What if that account that you have right now with $1,000, it's the only that you have left? Have you ever tried that mental test? Like, if this is the only thing that I have left and I have to eat with this, how will I trade? Do I trade the same way that if I have 10,000 bucks? Probably not. So you can do those samples yourself, but it's gonna depend on you and how seriously you want to take your trading career. Here, I'm gonna breathe myself. But I take this very passionate, guys, because as I said, I lived this in my flesh and bones, and the psychology part, it's been my improvement in my trading by controlling my trading psychology, and my emotions have been from 0 to 100. So you need to know every one of you have an advantage. All of you have something different. Every time that I go on with a one-on-one, I see that, they see flow in a different way. They see certain indicators in a different way. They like charting different colors. They like longer term trades. They like Flips is an amazing scalper. I am not as good as scalper. I'm a better day trader. I don't know. I just keep on watching the freaking thing going up, and I don't get out in time. Like I tried and tried, but maybe, I feel a little bit more easier on myself by day trading. So you need to know where is your advantage. You understand what your system's performance. Are you aware of your profit factor and the win rate of your trading? Like every time that I get into a trade, I see where is my profit. Like I posted today on what my expectations are on Walmart, since Walmart is, and I think I might be wrong, but my belief is that Walmart the profits should be positive, because on a recession, normally the people change their consuming habits, and they go to consume cheaper things, and normally Walmart is a beneficial on this situation. So I think Walmart earnings should be higher. And I draw my trend line going up, and I draw what I expect, why I took at the end on the bottom of my trend and my support, my trade, and what do I expect to get out of them. Do you all do that? You have the clarity on the system that you have, because I trade trend breakups, breakdowns, and trending reversals. That's what I do. I like breaks and retests and trending breaks. Do you know what you like to trade? Do you even know how to use them? So those are the things why we're here. That's why you're here. You need to know what your system is. Do you prioritize your execution over the outcome? And I fight with this with a lot of you guys. Like, forget about the P&L, close the P&L. Do a week without watching the P&L. Just trade your chart. Enter where you think your indicators are telling you, and get out where your indicators are telling you. Don't trade because you're $100 up, or because you're $50 up, or because you went $100 down and I'm even. To forget about the P&L. P&L is a great thing just to watch if we control what we're doing. But we need to control if we know when we're getting in, why we're getting in, and when we're getting out. So try, not using the P&L for a week, or try for 2 days, and limit yourself to 5 trades a day only. You'll see how picky you're going to be on your entries, instead of having 179 entries per day. And then are you aware of your costs, of how many times you click to get into a play, and how much are you spending on that on a month, on a week? Do you have that? No, you should, because that's taken away from your profits, plus taxes, if you make any money. Adhere to your trading blueprint and implement it consistently. A trading plan aligns your trade management process from entry to exit before any capital is put at risk. That's what I'm talking right now. You need to formulate your plan. You have to introduce the consistency to your actions, and then you gotta not change that in any way. Like your stop loss, I always say to everyone, you can have a soft or flexible stop loss, but you have to have a non-negotiable stop loss. There's a stop loss that you're out no matter what. Don't oversee it. Don't move it a little lower. Don't hope that it's gonna bounce. You're out. And that's the way you're gonna protect it. You have to maintain your position sizing, guys. I bet how many of you have a $1,000 port and you bought GME contracts today at $400? Is that, what if probably some of you or most of you made money? What if it went the other way? This is our money. Remember, what if this is the only $1,000 that you have left? Are you going to risk it that way? No. Rely on our signals. Why do we trade? Why do we see our indicators? Why do we learn how to use BWAP? How do we learn to use our candles? So we have the sufficient signals to be able to be more consistent in the outcome of making money. That's our goal. We only care about making money, right? That's why we do this. But we need to have our signals and know how to use them. And we can use some external indicators too, which is news. We can see some groups maybe making money. We see the flow, etc. But yeah, swing, you got it. Especially earning plays, so risky to blow small accounts. I always I got a lot of people DM me all the time. Are you swinging this? Are you swinging the other? And my answer, it's always the same. Are you green enough to swing that contract? And I said it today in public. Somebody asked me about swinging that GME, and I said, are you more than $3,000 green today? So you can afford to lose $450 on a contract on GME? Are you? No? So that's your answer. The only way, even if I'm $3,000, I would never try to expose $500 or $400 in a contract if I'm not over that price. I'm not in a swing trade. I can day trade it because I can just set up my stop loss on $25 and I lost $25. That's it. So, but never on a swing. So but most of you guys know these answers. You're just looking for someone to back you up and tell you, yeah, you can do that. No, you know that you can't because you can't afford it. So let's not risk our ports. We need to, increase and multiply our ports. So why are we going to take trades that don't make sense for you? You need to focus on what's happening, not what you think should be happening. You have to stay open-minded. You need to know what's happening. Oh yeah, I think GME is going to be going all day. No, this is a specific short squeeze. You need to know how this works. You need to know how to trade it. What you can do when this is happening, there's going to be halts. There's going to be stops in the trading. And if one of these stops, you and probably thousands of people today, they were buying on the top and then it got halted. And then when it became back when it opened again to trading, there was a huge gap down and probably they just panic sell. And those are losses of $400 per contract because those were the only contracts that were open at that time at 34, the GME 34 calls. So did you do it? Are you aware of how to do that? Swing is telling us that I make hedging as a main trade of the day. I lost big percentage of profit run. How you hedge for a small account? I'll talk into that if you don't mind. And when we end up this part, we'll talk a little bit about that. Know your minimum risk and your reward ratio. This is for everyone. We said it all the time. The ratio normally, if you see a move that it has 1 to 3 risk to reward ratio, those are what we are looking for. If I'm in the middle of a range, why am I going to try to search for 0.5% or 0.6% on a trade when maybe I can just wait and I have a better setup for a full, move 4, 5, 6 points and I can have a 1 to 3. So don't see everything as an opportunity. Which one is the best opportunity that you are watching? So don't jump into anything, guys. Like today, Apple, for me, was a lot of a better trade than GME or ANC. ANC was great just because it was fun. It's the Ivy, it's huge and stuff. But Apple did a huge move today, and Apple went from support in the 50 EMA to a huge break of 187, broke a couple of levels, and then you have a perfect out at the breakdown of the 50 EMA again. So why are we watching other names when we have, these ones that we can rely on? So yeah, those are the questions that we make ourselves all the time. This one, recognize when you need to cut your losses. This is very, very, very common because we are fearful of our gains and we love to keep our losses. That's what happened every time in trading. We just love to keep holding and holding and holding the losses. But when every time that we have a move that start gaining, you stop out, you trim, you stop out, you're out. You never let it go. Why? So we need to know when we need to cut the losses. We need to be consistent in managing our losing trades. We need to know why the primary reason of many traders struggle to turn a profit is because they don't know how to contain losses. We need to lose a couple of times because everyone loses. We lose every day, but our gains are better managed than the losses. I mean, the gains are better managed because we manage our losses in a certain way that they're not going to be larger than our gains. And that's how you keep green on the day. Yeah, it makes sense? Yeah. I was complicating myself there. For developing it, is there a good template for developing a trading plan? How often should you update the plan? Gail, that's a good question. I never search for a template for a trading plan. I plan my trade depending on what's happening on the pre-market. And depending on my levels and my trend lines, I'll see as we talk which trade I think has the best move. And from there, I will go more into detail on finding if I get in here, this is my stop loss and it should go all the way to here. So I will take my first trim here and here. So that's what I will do. I don't think there's a universal template because the market, it's dynamic. We're moving every day in different ways. So my best advice will be every pre-market or at night when you're, setting up or arranging your charts, be aware of which ones are best placed to your levels, to your trims, to your trend lines. And then from there, you can decide these ones are the one. I mean, remember, I love levels. And if I'm between levels, I'd rather take one that it's either at support or at resistance. Because why? Because that name is going to break it up or down. So I don't need to try to guess one that is in the middle of any levels. Search for names that are at known support or resistance levels, because the only thing that they're going to do is break it up or down. So, and you will find, using our indicators and using the price action, you don't need to be the first one to jump in. You can just let the move happen for a couple of candles, and then you can just jump. So that will be my advice, Gail. I invite you that if you find anything online, you can please share it with me. But I don't look for a template specific. And your discipline is gonna shape your trading future. We know this because your consistency is gonna be what's gonna determine your success. And that's why we need to be very careful every time that we click buy a call or sell a position. Because remember, every time that we're doing this, we are, responsible of what we're doing. And imagine that every time that you're clicking, you're an analyst and there's 400 people that you're responsible for. And even worse, you're responsible for your family. So that's more pressure. Like, can you give it, do you have the freedom to start losing that money just by clicking? Yes, no. So that's going to give that. Those are ways to keep you in line with discipline. I'm not trying to be, I don't know what's the word, nosy, or trying to make you that you need to feel guilty because no, it's just how do you make yourself militarily disciplined enough so that you're not gonna go skew to the sides and try to, I'm gonna trade this one to see what happened. No, stay. You just need to stay, within those rails, and that's it. So that's this is an example. This is just a sort of example. that I found that I liked. So this is just to give you an idea, guys. This is for if this is for shares, not for a specific for options, but normally if we don't want to lose 1 to 2% of our total capital, and we have a $10,000 account, that means that our max losses per trade that we should have is $100. So, okay, $10,000 account, our max loss per trade should be 1 or 2%, which is $100. How many $100 trades you want to lose of the day? Well, that's up to you. If you have more than 4 or 5 trades in a row and you're still losing and you keep losing, my advice always is stop and then come back in a couple of hours. If you still have 2 more, that's not your day. You're doing, change what you're doing. So your stop loss, because a lot of people ask about how do we set up our stop losses, should be placed at a price point that it's going to be indicate the invalidity of the position sizing that we have with this level. Sounds complicated, but it's a lot easier to do. How do we do this? If you have your $10,000 account and you trying to get into a stock that the price is $15, but my technical support, that means where should I put my stop loss, is at 10. That's what my level is. The actual price is 15, but if I need to be stopped out, it's going to be $10. So how much am I risking per contract there, or per share? Let's call it this way, $5. All right. So I have a $10,000 account. I cannot lose more than $100 per trade. And I'm trying to get into a position that each share it's a $15, but I know as per my chart that at $10 I need to get out because that's 10%. So if I have $100 risk and if I divide that by 5, that's going to give me that I can get into 20 shares. So that's a way to know and calculate how I mean nowadays, like most of the trader, brokerages, they do it, automatically. But this is a way to know how much risk can you take. We can do this math, in shares, in options, whatever you like. And then what the size of that total position that you have is $300. Because if you lose, those $100, that's your 10% that you are allowed to, and you need to get out, and you will be stopped out. So you need to set up your stop loss at 10 per share, and that's going to be your $100 that you're going to lose on that trade. So this is just an example of how you can visualize. I always take my trades super tight. My stop losses are always super tight. I will go I always set 10%. Sometimes I go in dollars amount. If I get a 66, I put it at 60. If I enter at 58, I put it at 50. I put it in my even numbers if I'm in between, and that's where my stop loss is going to be. Why? I don't want to risk, and I want to have control, and I know where I'm getting out. I know what my price of getting out is, and I know, I'm normally, if my position size is 5 contracts, I know my easy calculation of how much I'm losing and how much I'm down. So that's something that you need to do in every trade that you get in. Now I'm going to open the floor for questions, and I'm going to do something else. I'm going to change what I'm sharing right now, and I'm going to jump into this. And now you should be able to see this chart. So tell me something, guys. How many of you jumped in GME somewhere around this level? How
I
many?
didn't touch it. I didn't touch it just because it was too much.
Who's that?
It was Bobby Shake. Just because I knew, I'm trying to just, manage my small port and, go from there. And the moment I saw the prices, I think it was around $450 initially for that first candle, I was like, nope, I'm not touching it.
Yeah, I tried to buy when we got market open. I tried to get into the 34 and into the 34 calls, and they weigh $54. And I did market buy, did not get filled. I was able to take it out, and then the first fill after that was $450. Imagine like how volatile was that the price that it was set there was $50, and when actually the IV pumped into the contract, that thing was $450. Imagine if that doesn't go your way. Imagine if instead of that was going down. So
Well, initially I did buy, but it didn't get filled because it pumped up so fast and
exactly,
hard.
yeah, same thing that
I
happened to
think
me.
I think I did one simple contract for like 60 something bucks or whatever, and then it just sat there, and I was like, all right, enough of that. So I canceled it, and
Yeah,
I was just like out, and I hit refresh, and I was like, holy shit.
yeah,
And it
yeah.
just jumped up exponentially, and I was like,
But
nope,
imagine
I'm
that
not
if,
touching that.
but imagine that if it would have jumped up, like filled you and then go down. That would have been like $400 automatically. You would have been down just by clicking trying to exit that position. So that's the risk of that, and we don't know it. So, but this is, and look, this is an amazing like momentum trade. It's crazy, but if we go to Apple, look what Apple did. Apple was a beauty. Look at how it broke the 50 EMA, broke it, then it kept going the whole day until here. And as soon as you saw it crossing the 9, it will give you advice that, I could get out. And if not, you could have just get out here. So you grabbed it at 185.29 and then you got out at 186.6. That's fine. That's a win without any risk. And you could have bought 10 contracts and make a bunch of money just by doing this instead of trying to grab a $450 contract, play. So things to get in mind, And then JPM had this huge way down today. So those are things that even, I mean, instead of playing GME, AMC had a lot more sense. Look, one touch here on the 50, and this was a beauty of a chart that I grabbed the 4.5s with flips somewhere around this area, and they went all the way into the money and huge gains here. Then I got out here when I start flushing here. I got out, and that's it. And I kept one for tomorrow. Yeah, because I'm green on the day. I can, for I don't know what was it, like $37. I say like fuck it, I'm gonna take it for the day. But I hope, guys, that my passion on sharing how important is to be calm, to be in control of what we're doing, to breathe, to have a plan, to manage our position, how important all of those are to make us a successful trader is non-negotiable. Because I sleep every night 8 hours without any problem, without anxiety or anything, because I know that if I lose on that AMC that I swing and my Walmart, that's not gonna hurt my gains from today. Are you doing the same? Are you sleeping well? Are you okay with the risk that you took on the I don't know, trades today? How do you hedge? And I want to answer this is one of the only questions that we had on the chat. Swing, you asked me, how do we manage to, if we have a small port, how do we, let's see, hedging is the main trade of the day. I lost big percentage of profit run. How do you hedge for a small account? Normally, swing, hedging depends if you are in a position. Because if you're not in a position on your day trading, like what you're doing is just, trading up or down. If you are in a position that you think it's gonna go sideways, let's say you bought Apple for tomorrow, and Apple is, QQQ, but we don't know if Apple's gonna go up or down. You can find maybe another name that it might work in a different way. Let's say that you thought that and Apple is gonna just jump
Hey,
tomorrow.
Empanada, let me try what I'm trying to say. Let's say I have a $10,000 account, and usually I don't do more than 25% option trading. And out of that, if I'm taking a one or two trade, one would be hedging. So I have right now 517 puts, which is I took last Thursday, which is right now down put. So the remaining is only one or two trade that would make my loss only 100 or 150. So it would be only 3 or 4 contracts. So
Okay.
if my daytime, if my contract, I mean the alert goes down, and even hedging is also going down. So I usually swing the hedge. I never do day trade. I just take at
Yeah.
least 2 3 week in it. Otherwise, there is hedging.
But
So
because you normally don't, you normally you like to trade for longer terms.
yes,
So that makes sense because while you are in a position, the idea of the hedge is that normally it's gonna just go to smoke. You're gonna lose it. It's just in case of we go the other way, you don't lose the whole amount of your main trade, but you will recover something by that uh, contrary trade that you're doing or opposite trade that you're doing. You're gonna try to save some of that trade. So that's why we use the hedges. But in a small account, you can do it the same way if you're swinging. If I'm swinging one AMC contract, you can maybe swing one SPY put that is not more or less close to that price, that in case that if we jump today and tomorrow we flush, that AMC is going to go to nowhere, but you don't lose the whole premium on that AMC, but the SPY put is going to make you some money. So that's easy to do it. Sometimes you can, I mean, if we're playing high IV names like AMC or GME, maybe you can get screwed in both, and that's a possibility. So you need to be very careful on how to choose your contract.
right. So I don't do GME AMC right now. As per my skill set, I'm not allowed to do all this. So it's better to do with the slow moving and try to make bigger portfolio with risk in mind.
Okay, and what name do you tell me that you had on the long term?
On a long term, I have a PayPal, I have a SoFi, I have a Enphase Energy,
Okay,
lithium ETF, uranium ETF, URA. So those are my slow moving that I take at least 1 2 months or 3 months expiry, which is just a stable option which I took it, and only one or two play, but not AMC JME. I mean, otherwise I will lose whatever I'm gonna do on my ETFs. So there
yeah,
is no.
yeah. So that's why you do those hedges, and that's a perfect, like, hedges are the way how do we protect that if our trades go wrong. So that's a way, and the purpose of the hedges is to lose them, because since if we take them correctly, we're gonna make more money out of our trades that what we're gonna lose on our hedges. It's just a little secure there. But that's great. I mean, that's another way of avoiding risk. If you're doing long term and you have positions, hedging is the tool that we have to protect our port. Any other question, guys, about psychology and what's going to happen to our AMCs and GMEs tomorrow? Who's struggling with trading psychology? Like who still blames something else instead of ourselves or yourself of what's happening? Like, are we all being responsible of what we're doing? Have you ever done that question to you? Do you think the market is rigged and it's trying to take the money out of you, or just taking shitty plays and that's why we're giving the money back to the market? That's a matter of how sincere we are with ourselves. Have you done that job?
Hey, this is Gail.
Hi, Gail.
Hey, one thing you said I thought was amazing, which I've never really paid that much attention to it, and that it will become the fees that are taken out. I was like, I need to start adding that to my my Excel sheet of putting that in there because I've never really paid attention to that. So thank you for that tonight. So that's a piece of the psychology I think I just kept away, which that eats into the gains. So thank you for that.
No, my pleasure. I mean, as I said, this is not something that it's fixed. I'm learning every day different things. And as I said, I wanted to use sports as an analogy because I think everyone does that. Like I'm gonna be a day trader, and then I open a Webull account. I have that $5,000 that I sold my car. I put the money in Webull, and today, oh, GME it's moving. I played it and I lost $2,000. Yeah, I mean, what were you expecting? That you're gonna grab some, running shoes and you're gonna doing the I don't know, the tryouts for the Olympics marathon, and you were going to classify in your first run without training or doing anything? Yeah, well, some people do, very rare, few percentage, but most of that people are training for 4 years just to have one race for 1 hour, and they train for 4 years to be there. So what are our expectations that we're going to be successful in how much of time with how much time are we putting into trading? Because knowing all the concepts and everything is one thing, but do we feel comfortable how the market is moving, how the candles are moving? Are we doing enough of that paper trade to feel comfortable? So there's a lot of things, but I hope that this is useful for everyone.
And just to add, this is Bobby with Gail, to your point that you made. I noticed the fee thing probably a few weeks ago, and I use Thinkorswim as well.
Yeah.
And I was using my Schwab account, but the fees were so high. And as I'm trying to learn to build my portfolio up, the fees were just killing me. So what I've been doing is I've been trying to master my Thinkorswim charting and just using that as the tool. But I reverted back to placing all of my trades back in Robinhood
Okay.
because their fees are so minimal. And eventually I'll switch over when I have some negotiating, abilities with, Schwab to have them reduce that fee, but their fee was killing my account. And so that's why,
and that's something that we need to add, because remember, we sometimes, if we have some gains, then we have capital gains taxes. Are you calculating that? Because Flips talks about that all the time. Like, hey, if I made $5,000 this week, am I the owner of $5,000? No. You have to talk to your accountant and see how much you need to, put aside of that gain. And we only have certain amount depending on different states of losses that you can actually, declare. So fees, costs, there are things that we like. In one of the things why I encourage people to take very few trades a day is like sometimes you made $100, but then you made 150 trades. You probably gave back like $70 on fees. So what is it a lot better that if you grab a one good setup, then you make 5, 6, 10 contracts, you make your gains and you're out, and that's it. That's the only thing that you need to make. That you don't need to jump back 100 times on a day. You can do 4 trades efficiently and be super profitable. But we need to know, and we need to know about those costs that we are exposed to, and we don't know them. So it's like I bought a house, but I have no clue how much do I have to pay my HOA, or if I have to pay my the landlord or whatever. No, we need to know everything. $70 and pay 100 in fees. Yeah, Scotty. That sucks. Any more questions, guys? Any more doubts? I'm just browsing some of the charts right now in case to see what I missed. Look at this chart on HT. Ref loves to trade HT. Was a beautiful break of, look at this, 50 EMA all the way down until here. Boom. What a beauty. All right, guys. If you have any more questions, thank you very much for your participation. If you have any doubts, and in any time you need any encouragement, you need any help, you need any, words about anything, just, let me know, guys. That's why we're here for. And I hope that you have a great day, that whatever positions you're seeing are green tomorrow, and have a great night. Thank you.